Good morning, folks. My name is Curtis Chandler, and I'm president of PFL. We hope that you are enjoying our early morning briefing. We are live 7 a.m. Eastern every Monday. If you are viewing this podcast through our reports and are up at 8 a.m. Eastern, please tune in next week live instead. Please like us and follow us and pass on the good word. We would certainly appreciate it. We are over 770 followers with the objective to get to 1,000 followers during Q4. Please pass on our reports to anyone you feel would be interested in receiving them and have them sign up directly with PFL. The reports are free, and we send out a daily market report, a weekly rail report, and a monthly rail car storage report to over 15,000 industry participants. Our weekly quote this week from people that we believe are really smart is from Walt Whitman. Walt was an American poet and journalist. Walt is among the most influential poets in the American canon, often called the father of free verse. Walt Whitman once said, "Keep your face always towards the sunshine, and shadows will fall behind you." We really like this one, folks. Reminds us to always look at the positives in life and to keep marching on. We don't want those shadows to get the best of us in life. And we hope at PFL this week that everyone is full of sunshine, at least the best we can be. The U.S. Labor Department stated on Thursday of last week that U.S. workers filed an additional 840,000 initial jobless claims. The number of first-time followers for unemployment benefits were higher than expected. Claims have remained above 800,000 per week over week since March as companies are slow in hiring. There is still 25.5 million workers collecting some form of benefits from the U.S. government. The Dow Futures closed higher on Friday, up 161 points to finish out the week at 28,586.9 points, up 904 points week over week. The S&P 500 traded higher 30 points on Friday, closing at 3,471.3 points, up 129 points week over week. The Nasdaq finished the session higher as well, gaining 159 points and closing out the week at 11,579.4 points, up 505 points week over week. In overnight trading, Dow Futures traded flat and are expected to open flat this morning from Friday's close. Oil prices declined Friday of last week after a significant weekly gain. WTI traded down 59 cents to close at $37.05, a gain of $3.55 or 9.6% per barrel week over week. U.S. crude inventories increased by 500,000 barrels last week and now stand at 493 million barrels, according to information from the EAI. Consensus was for a build of 294,000 barrels. Record crude production was shut in the Gulf, totaling 1.7 million barrels in anticipation of the arrival of Hurricane Delta last week. Distillate inventories were down by 1.4 million barrels barrels, and gasoline stocks decreased by 1 million barrels. Oil is lower in overnight trading and is poised to open at 40.04, down 56 cents per barrel from Friday's close. Total North American rail volumes on the bullish side were up 1% year over year in week 40, resulting in year-to-date volumes that are down 9.8%. 7 of AAR's 11 major traffic categories posted year-over-year increases, with the largest increases coming from intermodal, up 5.6%, grain, up 23.1%, and metallic ores, up 20.3%. Other items that we're watching in the market, well, intermodal rail traffic is roaring back, folks. U.S. imports of consumers' goods are surging. They set an all-time monthly record in August of 2020, with China supplying a huge share of them. After stalling in the spring, China's export machine has come roaring back and now controls 14.6% of global exports. In a recent article in the New York Times, an author noted China has grabbed a much larger share of global market this summer from other manufacturing nations. The pandemic has also found China better placed than any other exporting nation. It is making exactly what the world's hospitals and household families needs right now: personal home protection gear, home improvement products, and of course lots of consumer electronics. A boom in U.S. imports from China and elsewhere in Asia means that some U.S. ports are seeing much higher volumes than they expected a few months ago. At the Port of Los Angeles, for example, August 2020 was the highest volume month in history. Gene Sicarico, the port's executive director, recently said, "In May 2020, we saw our lowest container volumes in more than a decade. Since then, there has been a significant replenishment of warehouse inventories, coupled with retailers planning for consumer holiday spending. It has created a surge of imports." He added, "It is our view that the surge will cool off in the coming months due to a variety of factors, including weakening consumer demand and satisfying the replenishing of business inventory." We're watching a number of economic indicators, GDP, for example. On September 30th, the Bureau of the Economic Analysis released its third and final Q2 2020 GDP growth estimate, annualized at minus 31.4%, a slight change from the second estimate the month before of minus 31.7%. The most recent GPD data from the Federal Reserve indicates that GDP grew by 35% in the third quarter of 2020. The BEA's first official estimate for Q3 GDP will be released on October 29th. We're watching PMI. PMI from the Supply Institute for Supply Management is based on a survey of several hundred supply managers at manufacturers throughout the country. The PMI is considered a good indicator both on the ground conditions as well as near to medium term sentiment. The services PMI, which was formerly called the Non-Manufacturing Index, or MII, is like the PMI except it tracks services instead of manufacturing. Both surveys track the direction and changes in business activity rather than the magnitude of business activity. For both, a reading of above 50 indicates expansion and below 50 signals contraction. The PMI was 55.4 in September, down from 56 in August. It has been above 50 for 4 straight months. The overall PMI fell in September largely because its new orders component fell from 67.6 in August, its highest level in more than 15 years, to 60.2 in September, which is still higher than any other month in 2019. Of the 18 manufacturing industries, the PMI 14 reported growth in September, down slightly from 15 in August. Consumer confidence. The Conference Board's Consumer Confidence Index soared from 83.3 in August to 101.8 in September, the highest it's been since March of 2020. That's good news, but it's still well below the average of around 130 in the 18 months prior to the pandemic. Meanwhile, the University of Michigan's Index of Consumer Sentiment reached 78.9 in September, up 74.1 in August, and also the highest it's been since March of 2020. We're watching consumer spending. Consumer spending has been increasing over the past 4 months. It rose 1% in August, but the pace of growth is slowing. Since consumer spending accounts for approximately 70% of US GDP, that is a worrying sign of the overall economy, or hopefully spending will increase. Petroleum by rail. The 4-week rolling average of petroleum carried on North America's largest railroads rose to 21,093 compared with 21,963 a week prior. CP shipments fell by 11.8% and CN's volumes rose by 10.9%. In the US, CSX had the largest percentage increase at 12.2%, while the NS had the largest percentage loss at minus 6.4%. North American rig count was up 8 rigs week over week. The US gained 3 rigs week over week with 269 active rigs. Canada gained 5 rigs week over week, and Canada's overall rig count is now at 80 active rigs. Year over year, we are still down 655 rigs collectively. Railcars in storage. As of October 1st, the total number of railcars in storage continued its downward trend to 451,781 cars, representing a month-over-month decline of 24,791 cars, or minus 5.2%. The number of rail cars in storage remains 88,141 cars, or 24.24% higher than this time last year. Despite total cars in service decreasing slightly, the percentage of the overall total fleet in storage declined to 27.12% from 28.57% last month. This is well below the July high of 31.5% of the total fleet in storage, but still higher than 21.71% of the total fleet in storage this time last year. Lastly, looking at pre-pandemic levels, we are still 57,931 cars higher than we were in March 1st. For more information on rail cars in storage, please visit PFL's website and view our latest storage report, free online, which was just posted Thursday of last week. Well, that's all for this week's podcast, folks. We hope that you have a great, safe week, and we will see you next Monday. PFL has been extremely active in storage and all rail-related activities. Make sure to check out our just posted reports at pflpetroleum.com or call PFL to troubleshoot any question or concern that you may have at 239-390-2885. Thanks.